Looking at statistics, looking at the numbers, the Dow did something last week that it hasn't done in almost 100 years. It's been 99 years since the Dow ended down for 8 weeks in a row. Maybe that goes to your point, just the idea that this has been a slow and painful process, steady. And so people say that doesn't concern the Fed. This is still orderly at this point, but it is steep and it is painful and it is consistent.
Did you hear that?
Hey guys, it's Chase and it's good to be back with you again. The Dow Jones Industrial Average last week was down for the 8th week in a row. That's something that hasn't happened in 99 years. 99 years. A very rare time in the markets. We keep hearing statistics like this and it just seems to keep getting incrementally worse. No one knows where the bottom is, even though that's the everyday often asked question on CNBC. There are just no economic catalyst in sight right now that we can see. Inflation is running hotter than most people expected. The Fed is tightening their monetary policy. China has been on lockdown for weeks. Last week, even Walmart and Target had surprisingly terrible quarters. Oil and gas pump prices are continuing to climb to levels that we've not seen since the Jimmy Carter administration. And all indications are prices are going to continue to go higher. The United States of America had to get baby formula from Europe, for crying out loud. All the stimulus money is dried up and there's nowhere to park your money. We best be praying for a friendly hurricane season this summer and fall so we don't lose oil refining power or we will be in a world of hurt. So what's an investor to do? There are a few things that we can do, things that we are doing. Before we give you any of these ideas, follow us over on Twitter at MoonShot Money 1 for all the latest. We're going to play you a brand new clip from Elon Musk at the end of this video that is a must watch. Okay, number one, it sounds simple, but save as much money as we can. This is the time to be as sensible as you can be with spending. If you normally save 5 to 10%, move that up to 15 to 20%. Having some cash is a great thing to have on your side right now. Number two, start today building another stream of income. In a recession, you never know when your job and income may be in jeopardy. It's recession pressure that makes us get creative about our income. Start slowly creating $100 per month of additional income. I promise you'll soon get motivated to create several more streams of income. Get started today. Number three, realize that wealth is created during times like these. This is going to be a rare wealth building opportunity when the markets find a bottom. If there's a company that you love, if it's not an oil stock, it's probably on sale, marked way down right now. No one knows exactly where the bottom is, so I promise you this, we are buying more shares every week of several different wonderful companies that have had their stock price destroyed by all the things that I've already mentioned. Just yesterday, Evan Spiegel of Snapchat warned of a very quickly deteriorating internal condition, causing the Snap stock price to plummet. Then other tech companies began to fall after hours last night as a result. As we have been saying in videos lately, we have been buying shares of great companies over the last couple of months and will continue to buy. Have we overpaid? Yes, but we are in this for the long haul, so we know the market will recover at some point. It always has. We just don't know when. We heard someone the other day mistakenly say they had lost money in the stock market. There is a massive difference between your account being down versus selling at the bottom and actually losing your money. If your account is down, you still own the same amount of shares, and history says the markets always recover. If you make the mistake of selling now, you have lost your money. So what will you do while everything's on sale? That's the question. We believe the market might be down for at least 6 more months based on everything that we mentioned at the top. That's actually very exciting for us because it gives us more time to accumulate the companies that we love the most. So what have we been buying? Alphabet for one. We did a video a few weeks ago called Google This. Check that video out for all the reasons that we love Alphabet. We've also followed Warren Buffett's lead as he sold all his Wells Fargo stock and bought Citigroup. We have been able to buy shares for less than Mr. Buffett bought in the first quarter. We believe that under $50 has been a great value for Citigroup. Beat Down Disney has been on our shopping list as well, around $100 per share. You get a lot of business for $100. Multiple high-dollar amusement parks, merchandise, movies, streaming, cruise ships, and brands like Star Wars and more. Are there some issues and problems? Yes. That's another reason for the sell price. We've also been accumulating shares of NVIDIA, Palantir, Sofi, and DNA.
Palantir is trading below $8 a share now. Year to date, you can look at that stock and just how far it's fallen. We talked about the stock and asked him about whether he watches the stock price.
Really, never.
But you must look at it, given what's happened, given the collapse. And I ask because I imagine that you have employees who are looking at that stock price, and that creates its own complication.
Let me explain. Let me just, first of all, Palantir's launched 5 of the most important products in the world, some of which are playing an active role in every part of your life, both in terms of disseminating COVID, vaccine, and lots of things we're doing don't talk about. Every time we launch a product, people think we're idiots or crazy or insane, and very often these products power the world. So I don't see going on a DPO any different than launching a product. We're in the very difficult times. Palantir is built for difficult times. Of course, I care what employees, investors are going through, but what they should care about, and what I care about is, where's the company going to be in a couple years?
Walmart and Target both gave rough quarterly reports last week, and both stocks were punished. We bought just a little at these prices so we can buy more when we feel the time is right. Are we early? Yes, but we've been active adding shares to our portfolios with our newly earned dollars. The consumers are just starting to signal that their dollars are getting stretched. Inflation is not over. We are dollar cost averaging every single week and lowering our cost basis. The old investing adage is this: buy low and sell high. The question confronting all of us today is this: do we have the nerve to buy stocks while the prices are beaten down and great companies are being treated like yesterday's trash? The companies are still the same companies that we loved at higher prices. The innovation is still the same. The future is still the same. Macroeconomic conditions are creating a perfect storm for the stock market. Will you take advantage of these times and uncertainties? The future favors the brave. Elon Musk just gave a great interview at the All In conference. If you're a Tesla investor or you're thinking about investing in Tesla, this is a must watch.
Elon, I have a Tesla question. I read today, it's incredible. There was a Bloomberg article that said the following. So the setup is this. It said, since you went public, Tesla's up 22,000%, 11 quarters of sequential profitability, so hitting on all cylinders. But the public analyst...
We had cylinders.
That's a car joke. That's a combustion.
Firing, they're stepping on the gas pedal, firing in all cylinders. Turbocharged.
But analysts, when they put out their projections, okay, it's one of the most enormous bans for any company in America. The price targets for Tesla, despite all of this success, some have it at 200, some have it at 1,600. It's all over the place. You tweeted a couple months ago, Tesla's not a company, it's like 6 companies inside of a company. Like you've had to build this. Yeah, maybe more. Can you just explain to people all these companies inside this super company, just so folks have a sense of what had to be done to get here?
Okay, I mean, this question requires thought, and I'll probably be leaving out quite a few things. But if you look at, say, what does a typical car company do? What they do is they assemble vehicles and they send them to dealers, and they manage the supply chain. They might make the engine, or typically will make the engine, but most of the parts are made by suppliers. And a lot of the actual technology development is done by suppliers, and most of this vehicle software is done by suppliers. So the actual amount of real work done by car companies, what you think of sort of like a GM or Ford, is not actually that much. So they don't do sales, they don't do service. So in the case of Tesla, for example, we do our own sales and service. We don't have dealerships. Then Tesla also has by far the biggest network of superchargers, sort of the electric equivalent of gas stations. So we built an entire global supercharger network, which is still the most advanced and by far the best way to charge your car when traveling long distance, or if you live in a city and and don't have the ability to charge your car because of street parking or an apartment. So the whole supercharger network, we developed the supercharger network, we deployed it. I think we have, 15,000 superchargers globally. You can travel anywhere in America right now with the Tesla supercharger network. Then in terms of vertical integration, we make the battery pack, the power electronics, the drive unit. We actually make, we're more integrated in the parts. We actually make so much of the car internally. We're vertically integrated, not necessarily because we think that there's some religious reason to be vertically integrated, but because the pace at which we needed to move was just much faster than the supply chain could move. And to the degree that you inherit the legacy supply chain, you inherit the legacy constraints, including their speed, cost, and technology. And then Tesla is as much a software company as it is a hardware company. So the software that runs in Tesla operates the car, operates the screen, does the charging. All of that stuff is developed by Tesla. And so we have sort of a Tesla OS in the car. I could go on for a long time. And then very importantly, Tesla has built an autopilot AI team from scratch. That is the best real world AI team on earth. And if anyone else has got a better one, I'd like to see it demonstrated in a car. The full self-driving beta at this point can very often take you with zero interventions across the Bay Area from San Jose to Marin. So through complex traffic, it's really quite sophisticated. And I invite anyone to join the beta or look at the videos of those who are in the beta. We've got like 100,000 people in the beta, so it's not tiny. And we'll be expanding that to, probably a million people or a million, so on that order by the end of the year. So it's...
You had this slide.
We also built a chip team because there wasn't hardware that we could run the friggin' AI on. We couldn't just fill the trunk with a whole bunch of GPUs, because they would have taken a trunk full of GPUs that would have been very expensive and take massive amount of power and cooling just to be able to do what the Tesla designed full self-driving computer can do. So, and we started a chip team from scratch, designed it. It was the best in the world, and still is the best in the world several years later. And we're also then we're designing a Dojo supercomputer to be able to process all the video that's coming in from billions of miles of data, because just sort of like the way that it's very difficult to compete with Google because they have so much data and they have all the people doing searches all the time, and humanity is training it. But the same is true of Tesla. You really need billions of miles and ultimately tens of billions of miles of training data combined with a sort of a vast training computer, and then optimize inference hardware in the car and state-of-the-art AI and training and specialized software across the board to be able to achieve a full self-driving solution. The car insurance thing is a bigger deal than it may seem. A lot of people are paying 30-40% as much as their lease payment for the car in car insurance. So the car insurance industry is incredibly inefficient because they're just first of all, you got like so many sort of middle entities. You've got from the insurance agent all the way to the final sort of reinsurer. There's like a half dozen companies each taking a cut, and then it's all very statistical. So that there's even if you're a very good driver, like you could be like 20 years old and a great driver, but it's all statistical. So you either can't get insurance or it's extremely expensive. But Tesla allows for real-time insurance based on how you actually drive the car. You can actually, if you drive the car in a safer way, you actually have lower insurance. So ours is insurance is based on how you actually drive, not how historically people that fit your whatever demographic have drive. And then you can close the loop around your insurance rate by simply driving better and looking at your score and lowering your insurance in real time. And people do it. Actually promotes safer driving.
There are zero short-term catalysts to boost your portfolio anytime soon. We are only buying stocks that we will hold for a long, long time. Our strong opinion is we will be rewarded down the road. We're not telling anyone what to buy or even to invest at all. And we're not financial advisors. We are only telling you what we are doing as we archive our investing journey. No matter what you do, we wish you the very best and ask you to remember, this too shall pass. We just don't want to look back in 2 years and wish that we had bought more shares when they were so discounted. Remember, this is the worst losing streak for the Dow in 99 years. Hindsight's always 20/20. You have to be the bravest of the brave to invest right now. Watch this video right here if you want to learn more about what we're doing in this crazy market. I'll see you in the next one.